Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Big decisions versus small decisions. That's what I'm going to talk to you today. What could be a big decision? A big decision could be whether you should move your money from some other asset class into equity right now. Let's say you have a deposit maturing, you're going to sell a property which you inherited, you're selling your second or third apartment which you're not going to use anytime in your life. Should you bring that money into equity right now? To answer that question, we would need to go into a lot of merits and we should understand how you're going to deploy the money. The first thing is, should you deploy all the money in one go? The answer is a clear no. You should deploy money from one asset class into another asset class in a gradual, calibrated manner. Either you can do it yourself, or if you give it to a professional manager, he should calibrate the deployment. He should not dump the money the next morning after receiving it from you. If you give the money to a mutual fund today, I am afraid that is what most managers would do. In a PMS, you need to find out whether your manager is going to deploy the money in a calibrated manner. So, make that enquiry and be sure that he would invest on merit of the individual investment ideas that he is betting upon. So, while you make big decisions, you must definitely address the timing risk, but you must not run away from making those decisions. Many people think, oh, market is high, Nifty is at 20,000 plus, so I'm not going to invest. Now, that is a blindsided way of approaching investing. The market may be high, but you must be sure where you are going to invest. If you are going to invest in a part of the market where valuations are not high, why should you delay it? So, know where your money is going, know how it is going to be deployed, and if you are comfortable with the valuation in the space in which this money is going to be deployed, I see no merit in delaying. If you are sure that it would be deployed in a sensible manner, there is no need to defer the investment and you need not avoid beginning the process. So, big decisions must be made on merit with an understanding of how the money will be deployed and with conviction. Now to the small decisions. What are these small decisions? You already own a portfolio. Your advisor or manager wants to make another small decision of 3 to 5% in something. Should this decision wait? I think not. Right through my investing career, I have always never deferred an investment because the market valuations are high. If the investment valuations are right, I would deal with that investment idea on merit. But I see a lot of people taking their broader market judgment into their individual investment merits. They don't even see the merits. In case where the portfolio manager is asking you for money, he cannot even tell you about the idea or the merits. So, you will have to judge whether he is taking due consideration of these merits and you will have to trust him. This is where I see a lot of problem happening because people always want to see the broader market. They don't want to see what their manager is doing. In many cases, even though the manager has a history of doing this consistently, still people have the doubt in when the markets are at a high. So, instead of trusting the way in which your money is invested, you start doubting the broader market. The consequence is investors don't participate in individual investment ideas which are having strong merit even in a elevated market context. There have been ideas which I bought in 2018 which have done extremely well over these 5 years. The markets have not done great between the peak of 18 and now, but those ideas have done much better than the market. The reason I have been able to participate in those ideas, both as an individual investor and as a professional investor, is because I believed in the idea. I didn't distract myself by the broader market. Because in 2018, the broader market was made bullish by select themes which are not doing as well today. Even today, there are select themes which are doing too well to be blindly invested into. So you need to probably lower your expectation on the themes that are rocking. But there could be themes that are out of favor today in which you must invest. You cannot afford to wait. So as an investor, you have to distinguish between where the market is bullish and where you or your manager are bullish upon. If both are not the same, then you need to distinguish, differentiate and make separate judgments. I know it's not easy because the noise around you is so high on broader market sentiment. But nobody is rewarded for investing based on the broader market sentiment. You are rewarded for your conviction, which most often is not in sync with the broader market sentiment. You are rewarded for your contrarian bent, for your ability to do what others are not willing to do. So, be very aware of what brings you success. Be aware of what you need to do to constantly create that success in your portfolio. Be willing and ready to invest when opportunity presents itself before you. Be trustful of your managers or trust your own judgment where you are an individual investor. Don't trust the mood of Mr. Market more than these judgments. If you do all these things, then you will never fail to do what you need to do in your small decisions. Let me share a little secret. The biggest success in my portfolio came from these small decisions, all through my investment career. I have never thought about a stock and said, oh, I am going to straight bet some 20% and then win in that. I've always succeeded more in stocks where I started with a 2-3% investment when nobody was willing to look at that stock and gradually took up my exposure to that stock as the stock becomes more and more visible, more and more explicit and more interesting and inviting to invest. As I begin to like it more, I raise my exposure. But remember one thing, it all started with that small decision to believe in that idea when the market sentiment was frothy. This is something which I have learned from, I have benefited hugely from, and I strongly believe. So I never miss small decisions. As for big decisions, I hope that people distinguish between different styles of investing, different methods of deployment and different processes that are being put in play. If the process is right for you, if the deployment is something that gives you comfort, and if the money is going to be invested in a contrarian conservative place, I believe that you should not defer your big decisions either. So big or small decisions, deal with them on merit. Have a clear understanding of how these decisions are being made. Inculcate that clarity in your mind as to how these big and small decisions will impact you. Know how they can benefit you. Be sure that they won't hurt you, but never put off a decision blindly. Thank you for watching this video.